Good morning, everyone. We're going to introduce ourselves, and then we'll start the questions. So I'm Luce Veilleux. I'm the president of NIE Global, which is an incubator for Fintech, transit automation, and smart city. And I've been involved in payments pretty much for over 30 years.
Yeah, my name is Alexander Sjögren, and as you can tell by my unpronounceable last name, I'm from Sweden originally. Today I'm the CTO and partner at Yellow Pepper, and we are one of the leading fintechs in Latin America, where we help financial institutions and retailers to transform digitally.
My name is Jeffrey Bower. I'm the founder of Bower and Partners. It's a consulting firm that works with governments, banks, fintechs, and international organizations to develop fintech products and solutions that people actually use to win the fight against cash. I've worked with the United Nations Better Than Cash Alliance, with the World Bank, with the Alliance for Financial Inclusion, and I'm about to begin a position with the United Nations World Food Program to lead their fintech strategy.
Okay, so to kick things off, I thought that considering that Jeffrey's worked in Pakistan, pretty much everywhere in the world with the UN and different association, and Alex, have worked most around, well, a lot to South America and a lot in Europe.
Yep.
I thought we would kind of answer the title of our conference, which is basically, what does the rest of the world have to teach to Canada? So do you want to start, Jeffrey?
Sure, I think that I want to stick away from the big giants. I think that everyone is talking these days about Alipay and WeChat. And I think that there are incredible models that are having a huge influence on the way that our big over-the-top players are looking at getting involved in payments. But I think that in the rest of the world, there are really an interesting amount of models that are growing that represent an opportunity for both retailers, fintechs in Canada, as well as financial institutions to be able to respond to. And so I'm really interested now in understanding about how platform players are coming to the space and offering financial services in other parts of the world. That's really something that I think about a lot. And so I can give you an example of what's happening in Indonesia. Indonesia, the two major car sharing services, Gojek and Grab, effectively began as the way that Uber does, offering the ability for people to get rides and share rides between one place and the next. But using that technology and using the customer relationships and the data that they were generating, they began to offer financial services. And these financial services were not just being offered for their drivers. They would begin with insurance products and loans for purchasing the cars, but also as financial transaction points for the riders who have the free time while they're in the ride to be able to make financial transactions. The driver becomes a deposit point to enter funds into the financial system. You pay your driver an excess of your cash. That cash goes into your account, and you're able to make transactions not just with the community of the drivers that you're interacting with, but with all of the acceptance points that exists in Indonesia, and now this is spreading across Southeast Asia and East Asia. And so you have a model of a player that is by no means interested in financial services on the outset, but is now heavily involved in account holding, in insurance products, in payment services in a way that is really transformative for how that economy is operating. And so that's kind of one of the main examples that I think of. I can think of other examples of where you have major retailers, major corporations that are coming to their financial institutions and saying, we want to be able to branch out beyond what we have in store to be able to pay, to allow our customers to pay products and services. And Alex, we were talking about this. Maybe you would like to go into that?
No, I agree. First, on your first point as well, right? In Latin America, we see these platform plays coming to life all over the market. Just recently, last week, I think it was announced that Rappi got funded with $1 billion from SoftBank. So we're really starting to see these platforms coming to life, and I think that is extremely interesting to see how the banks are going to start positioning themselves here, because there is a huge opportunity to be, you know, the underlying platform that deals with the deposit, that deals with the compliance, and then can collect all the different data that is coming in from these platforms, and then optimize the product offering that the financial institutions have today. But so far they have been quite resisting in our region to take this role, and we're starting to see, you know, the retailers really driving innovation from the traditional, you know, the traditional players. We have Magazine Luiza in Brazil that 2015 realized that they really needed to have an omni-channel strategy. So they started their innovation lab with 2 people. Today there are 800 people in their innovation lab, and that innovation lab is not just there to sit on the sideline and look good in the investor deck, but they're actually driving their entire strategy. And this has had a tremendous impact on them. They have, you know, their revenues have increased 250% since 2015 to 18, and their stock has gone from $2 to $45. We also have OXXO, who is trying to really, it's the largest retailer in Latin America is 7-Eleven. Basically, they have 18,000 stores throughout Latin America, and they really are now figuring out that, you know, they can do a really nice mix between brick and mortar and the digital environment. So they are doing tremendous strides as well, and we have other, you know, super app players that are coming to the market with Unicomer in Central America and so forth. So I agree 100% with you. There is, you know, these type of platform plays that from the onset, you know, Rappi was a delivery app. Now you're doing peer-to-peer, you're doing bill payment, and you're doing the POS purchases and the disbursement payments through Rappi, and they want to go into transportation as well. But I think it presents a huge opportunity for financial institutions as well. But they really need to act and give up certain things. You know, I think we all can agree that banks are not fantastic in doing product innovation. The most innovative things banks usually do is lower the interest rate. And then user experience is not fantastic either. But there are things where banks are tremendously good, right? And I think that, you know, if you can open up and let go of certain things and start accessing more, you know, distribution channels, you can collect tremendous amount of data which can help the product development further along.
Yeah. So those are really good points, and we've all been working a lot with Latin America. And I think one of the big points that came to me when I started about 15 years ago, went to Latin America for the first time, was one of their products was how everyone was offering installment payments. You could buy a pair of shoes on installment, you could buy a fridge over installment, but I think you could buy a pack of cigarettes on installment. And when we listened to our speakers this morning talking about small business and how their revenue fluctuates, and we look at millennials and how millennials, I think, are a lot more conscious about their budgets, about cash. They're thinking of cash flow a lot more than others. And I think that for installment payments would be a product that would truly change the way basically both these segments would be able to market. So if you're thinking, I was talking yesterday about this with some of my children, which is maybe a young woman can't afford to buy a pair of shoes for $200 because $200 out of her budget, out of her checking account or a credit card is too much. But if she could pay that pair of shoes over 3 months, then she would say, yes, I can do. So it's basically, it's a way of involving the same thing for a small business. Maybe they can't buy so much inventory, but they can probably do it on installment. So again, installment payment came out of Latin America, I think, because there was a need because of their ability to get credit and be able to make certain payments. And it's a really good example of what we could very easily, well, not easily implement because we're back to bank regulation and systems, but that is a product that would be very attractive for some of the segments in Canada.
Yeah, I think that when you think about what's really shifting in the rest of the world, it's not necessarily new product sets. Mm-hmm. There's a lot of really interesting products that are coming out of other parts of the world: micro payments, micro insurance, micro lending, different products that are set for different market segments based on risk profiles, so limited ID, account services that are based on people who are only going to be transacting a very small amount, so the risk associated with them and the limits and the controls are much less. And that, I think, is one side of the innovation that's happening. But the other side that I see that's happening primarily in Southeast Asia and East Asia, but also in South Asia, is a view that the traditional concept of where revenue generation in the model is shifting. And I'm going to reference back the CEO of CIBC yesterday, who was talking about fees as it relates to payment accounts. And to continue thinking that the only way to be able to generate revenue is from the way in which a fee is charged directly to the customer or shared between the merchant and the issuing bank and the acquiring bank is a model that has been successful for a long period of time, but is completely changing. And when you look at the Facebooks of the world, the WhatsApps of the world, the Googles who are involved in payments, they don't necessarily look at that final moment of transaction as the only point to generate value in the entire transaction purchase. When you begin discussing with your friends on a platform what you want to buy, and you share photos with each other, and then you look and research where you're going to purchase this item for, and then finally you make the decision to make that transaction at the end of the purchase, there are many revenue generating opportunities that take place through that entire decision-making process. And so many of these organizations are not going to be charging fees and are actually going to be losing money as part of the transactions. Payments in many parts of the developing parts of the world are not seen as revenue generation tools. They're seen as a necessity to enter people into platforms and ensure that people continue transacting through other more revenue generating services. And so a Facebook may say, we're not going to charge you necessarily for a transaction, the actual transaction at the end, because the information that they're generating is sufficient to drive the advertising side of their business, which is what they're most interested in. Yep. And so when you look at what the next generation of payments, at least in the parts of the world that I focus on, figuring out what the fees and how that fee is going to be managed between the merchant and the acquiring bank and the issuing bank, are actually between the client and the customer, is not the only source of revenue that exists. And in the majority of the markets that I work in, there are no fees that are being charged, or very little fees that are being charged to customers, because the competition is so tough, and because the competitors that are getting involved in the marketplace, as I said before, the driving apps or the merchant stores or the over-the-top players like Facebook, Google, and others, see the necessity of offering payments as a requirement to get involved in their ecosystem, rather than a source necessarily itself as being the revenue generating service. You want to get people to participate in your platform. Payments are a requirement for that to happen. Don't punish them for that. Lose money on that portion. And anyone who looks into the WeChat and Alipay model, they've been very, very, very honest in saying that they are losing a ton of money on the actual payment side of their business. But as a result of enabling those payments, they're able to generate a massive amount of income as a result of all of the other products and services and in-app transactions that are taking place that are facilitated by that payment. And so that mentality of shifting away from payments as a revenue generator to payments as a loss leader to begin to bring people into your transacting environment, I think is something that Canada needs to learn from.
Yeah, and I think it presents a big challenge, right? Because if you're looking at all legacy systems we have with ACH, you know, whether it is, you know, SWIFT, whatever it is, right? Like you have an associated cost with doing those type of transactions on these legacy systems. And if you're looking at the newer technologies, whether you build a ACH on blockchain or, you know, with stable coins or whatever it is that when you want to do an international transaction, you know, it's easier then to waive fees, obviously, but when you're doing this, you know, legacy type transaction, there is a cost associated with it, and it's up to the financial institutions to be creative on how do you get away from that business model, and how can you really make up for those type of transactions, and ultimately migrate to a new system where you have, you know, these cost efficiencies.
Yeah, and it's interesting for me because we've talked today from South Africa how cash is expensive. Cash is expensive to manage. Cash it creates securities issues. So I know that Jeffrey on his, if you look at his LinkedIn profile, will say that he's like, he's waging a war against cash or something. But I know that MasterCard clearly a few years ago was talking about waging a war against cash. And I think that in South Africa, if we look in most markets, if we look at why, for example, Colombia. So if we look at Colombia, that is basically mobilized, I would say, most of their ATMs and most of their point of sale terminals. And the reason why I think a lot of it that's driving that is security reason. It's basically, if you live in Mexico City, you do not want to pull out your wallet at an ATM. You don't want to have a wallet. So if you can use your phone to get money from an ATM, and that's one of the solutions actually that Yellow Pepper is offering in Colombia right now. It changes your world. So I think that, and we have to, building on Jeffrey's point about really kind of thinking of how we're making money differently. Scotiabank, when I was at Scotiabank, we launched, I guess, the first mobile wallet, and I guess we're all involved in that, in Haiti. And as Scotiabank, we looked at this as a social, basically a corporate responsibility initiative. We weren't expecting to make any money out of it. We were basically holding I guess, virtual accounts. What we discovered, interestingly enough, very rapidly as we launched and established this product, was that we thought that people would just use it as a transaction account. So move money in, move money out, and there would be no float. What we discovered is that we were covering, because it was a virtual account, we were actually covering and making money at Scotiabank because their people were actually leaving money in that account. And I think that, again, is when we start looking, we have to start thinking of mobile and fintech and solutions and look at different ways of making money. One of them is float, obviously another one is cross-sell. Another point that's really passionate for Jeffrey is talking about innovation around our regulations, around our bureau information gathering, information privacy. Do you want to tell us what you think about that?
Sure. I think that one of the things that is happening around the world and that has yet to come to Canada, but will be coming to Canada, is an understanding that the regulations that exist in force for banking and financial services are protecting the incumbents and not necessarily promoting the right kind of innovation in the marketplace. And you see a lot of regulators in the world, in the UK, in India, in Mexico, that are taking now deliberate steps forward to open up the access to the financial service regulation in order to offer different financial services products through other kinds of financial services providers. You see governments stepping in to promote collaboration, to promote cooperation, to promote the establishment of standards, as we heard earlier on in these conversations, and really to kick the market in the butt and say, you know, the way things are now is not necessarily the way things can be, and that to really drive financial services to the masses, you need to encourage as much competition and bring as much ideas and products and services to drive that to the consumer. And so innovation is not necessarily always product driven. A lot of times in the market you see a lot of innovation coming around regulation, you see a lot of innovation coming around business models, you see a lot of innovation coming within organizations looking really about how they design, test, and launch products, taking less of a bank-led build once, deploy, and leave it, but more of that fintech idea of launch something that's almost baked and continually, incrementally improving on these products and services, and testing what the market tells you. Because, again, in Canada, we have a very bank-led, rigid model, and that's been very successful and stable. But there are definitely examples from around the world of how financial services can be delivered in more efficient or more uniquely identified solutions. And when you look at, and the regulations, I think, in Canada are not yet at a point that enable that. Open banking is part of it, but there are other aspects that definitely need to be looked at. Mexico, I helped working with the government on defining their fintech regulations that focus on regulatory sandboxes to enable new kinds of organizations to have that flexibility to be able to grow and test and build their product, and really to be able to see what do people want. And the examples of South Korea, of Japan, many other parts of the world is that individual people want individual services to solve all of their payment needs. People don't necessarily have that direct relationship with one financial provider the way that we do have in Canada. And that if people want to have different financial relationships, they want to be able to pay using different methods. The average number of bank accounts that a person has in South Korea is 6.2. So we're really talking about a different kind of world where people interact with financial services on a very different method. And there's just examples around the world of how Canada can take those models and apply it into improving the work that we do here and the way people interact with financial services. Maybe you want to talk about Sweden, perhaps?
Yeah, but Sweden, you know, the banks have been sitting in a very dominant position in Sweden for years, but they realized quite early that you know, the product innovation that they had during the dot-com era and everything like that wasn't up to par. So they started, I think the project I started with them was probably around 2007-8, where they have realized that, you know, they had traction on their mobile banking channel, online banking channel and the mobile banking channel, but they started to feel the threat. There was a lot of fintechs coming in and they were doing a far better job at it. So they started doing an assessment on what were their different assets. What was it that, you know, they were sitting at in a good position at. So they figured out that, you know, authentication, we're really good at authentication. And we have our bank branches and we can make sure that people goes in and do a strong authentication and original authentication. So what they came together with was saying, okay, let's create an online ID. And we did. We started designing that solution for them, and they started doing it with the mobile ID as well. So this has been tremendously successful. They implemented it first at their, you know, the online banking to be able to authenticate yourself at the online banking, and now they're selling the services to governments and to fintechs and to basically everybody, right? Like I think we have. Out of the people that are eligible to have an ID card, they have 97% of them, and you're doing more than 400 million transactions per month, so it's, you know, 50 transactions per person. So now they really realize that, hey, you know, we are now a provider of these services to fintechs. They don't really, you know, they can survive very well on just doing the authentication and the signature game that they're doing today, where they, you know, even if you want to order a real ID card, you do that with your online ID, right? So I think that they were early on in figuring out that, you know, we need to take a new position, but from a regulatory standpoint, I think it's extremely hard even for developed markets to play along on, you know, on the compliance and regulatory, because, you know, innovation doesn't necessarily happen always because it's a great regulatory environment, because innovation happens because you broke the rules. And it's tough. I think Latin America is very good in the regulatory environment right now. They're doing a lot of focus on it, with, you know, what Jeffrey is saying with sandboxes and so forth, but it's always hard for regulatory and compliance to keep up with innovation, especially at the speed that is going in today and the different models, business models and things, how it changes. So,
and how has the Swedish consumer reacted to, I guess, this kind of very centralized, and in a way you could look at this as controlling or you could look at this as liberating, but how's the consumer looking at this if this idea has now become such?
I think, you know, the Swedish market, they have the benefit of, you know, we haven't had any major financial crisis where the banks have filed for bankruptcy and so forth. So the trust for the banks are still there. If you would do the same solution in Latin America, would be tough, right? Because the average population is not necessarily that positive towards the banking segment, and will probably like more than the telcos were taking this role or the retailers. But it's, since people are using it, on average 50 times a month, they're using it, a lot for all their different services. I don't think that there has been a really, no real setback from the population.
There is, and I should know this because I read about it, but there is one Nordic country that has completely eliminated cash.
Sweden, I think we're like around 98% of the transactions are electronic. So it's, as I like to say, it's only criminals that has cash in Sweden, but I'm sorry, Graham.
But they use Bitcoin, right?
Yeah. Exactly. No, but it's, it was a great push, and it was to the presentation we saw earlier. We had a lot of attempts of robberies to the cash transportation, and it was a huge cost to society that these type of things were happening quite regularly. So they did a push in the early 90s to start eliminating cash, and it is, I don't remember last time I actually saw a bill in Sweden.
And I think it's interesting is that the shift that happened in Sweden happened incredibly rapidly.
Yep.
And now the government is taking proactive steps to ensure that the cash distribution network is not completely dismantled in the case that it's necessary. And so they're dealing with what happens when you actually reach that cashless.
Exactly.
I've spent a lot of time in China, and 7 years ago you go to China and everyone would only accept cash. And from that time until the last time when I was in China a year ago, no one wants to accept cash. The risk that existed in the market of falsified bills and the risk of being able to manage cash was fully understood by the society. And so the shift happened in a very short period of time. You literally have a 3-year period where no one had bank accounts and all of the financial services were offered exclusively by banks, to a point where the majority of the transactions, even the woman selling peaches in the market on a little wooden cart, is telling me, I don't want to accept cash. You must pay me in digital services. This is my QR code. And so I wanted to bring up here my prop. And my prop is last week's Economist, right? And by showing this, I'm demonstrating to you that maybe in Canada we're not feeling the effects of fintechs in the way that other parts of the world is. But the Economist is already demonstrating to the rest of the world that this is happening. This is not a threat. This is already on the way. It's taking place in other parts of the world, and it's going to be coming to Canada. And so the question is how do we as Canadians, as part of our institutions, develop the solutions that can respond to this, but also prepare our financial services industry to take advantage of this? People's allegiances to major financial services and major institutions seem unbreakable. This country, it seems like everyone has these deeply entrenched relationships, but global experience has demonstrated that people are ready and willing to switch. Just the opportunities are not there in the marketplace. And so the question is, one, is the regulation going to be changed to be able to design a structure that will enable these kinds of players? And is the government going to create an environment that's conducive to that? And two, are the institutions, the incumbents, ready to be able to design and launch products and services to remain relevant? And if not, what are these platforms that are going to be coming here? What are the institutions that will come and shift that behavior? It seems crazy on one hand to think about an Uber offering financial services, but when you actually think about it a little bit more, Apple's already offering their products in the States. Yep. Would you bank with no frills? Well, people already do. You already have a PC financial division. What happens if that scales up and becomes these national services? And these are the kinds of conversations that we have to look at and understand that the rest of the world has great examples of how to make use of financial products and services. The question for the rest of Canada is, how do you take those lessons and ensure that the market develops in a way that is beneficial for consumers, but also for the industry on a long-term basis?
And as a recap, I would say that, we had a great presentation from PayPal and basically told, I think, that for me, we have to start with the consumer. And we have some significant change in our consumer base. I mean, we have the millennials that are basically have different needs and have a different approach and have a different view. We also have a growing segment of self-employed or entrepreneurs, which basically, again, is really, and we know that, I mean, all the bankers here know that we have always historically been very bad at servicing entrepreneurs because of their lack of credit history and their lack of stability in their income. And those two markets, I think, are going to be driving a lot of these changes. So thank you very much for joining us, and we'll be around. So if you have any questions, please come and talk to us. It has been a pleasure talking to you.
Thank you.